The year 2021 was a whirlwind of events. Our economy has been turned upside down in just 365 days. And you might be wondering, who can I trust for a safe and reliable portfolio? Who better than Warren Buffett to do it? Warren Buffett's investments are open to the public and can be found on SEC filings. In today's video, we will look at his 2022 portfolio and examine some of his most important holdings. But first, if this is your first visit to our Smart Stocks Academy channel, please accept my warmest greetings. Hit the like button, subscribe, and click the notification bell next to it to be the first to know when a new video like this is released. So if you're ready, let's get to the video. Let's begin with Warren's most important position, Apple. Berkshire Hathaway began purchasing the IT behemoth back in 2016. Apple was trading for roughly $26 a share at that time. This massive purchase turned out to be one of Warren Buffett's best ever purchases. It now trades for $159 per share, and its meteoric rise has allowed it to absorb a significant portion of the overall portfolio. Buffett's interest in Apple account up to 48% of his portfolio as of February 14, 2022, and he's profited almost $157 billion from that one investment. It's probably the best business I know in the world, Warren said in a 2020 interview with CNBC. And this isn't surprising given Apple's continual efforts to generate new revenue streams. Consider the case of the AirPods. The headphones were first sold in 2017. With a total of 15 million units sold. That number grew to 85 million in 2021 and is expected to reach approximately 100 million in 2022. If AirPods were a separate firm, it would be worth more than Adobe, Spotify, Twitter, and Snapchat combined. This is all from a side endeavor that only accounts for a minor part of their overall business. There is no reason why Apple can't keep climbing higher and higher if it continues to develop and enter new areas, especially as a luxury brand that can virtually charge whatever price it wants. Warren has made it clear that if apples were cheap enough, he would buy even more. He stated that if the opportunity presents itself, he'll load up on a stock until he has 10% ownership. But that opportunity hasn't presented itself recently. Back in 2019, you can hear him explain this to Becky Quick.
Apple, I don't see myself selling. The lower it goes, the better I like it, obviously.
I mean, Apple is not one of those 10% stocks. Don't you own about 5% of the shares?
About 5%.
So is this a situation where you have been buying since it came so much lower at the end of December?
It's really not back to where it may have briefly, very briefly got there, but if it were cheaper, we'd be buying it. We aren't buying it here.
Bank of America is the next company on the list. It may not sound like the most interesting stock in the world, but it is critical to Warren's entire strategy. Warren first invested in the company in 2011, when it was battling to break even at over $7 a share. It is now worth $38, and there is no sign of it stopping down. In fact, Warren Buffett has mentioned numerous times that he adores the banking sector, and it is simple to see why when compared to most other stocks. I'll delegate the explanation to him. Take a listen to him as he breaks out his banking investments.
So what do you think about banks? Not necessarily the sell-off today because you don't look at day by day.
Well, banking is a good business if you don't do dumb things on the asset side. I mean, basically. And it's a business that the banks we own earn between, the commercial banks earn between 12% and 16% or so on net tangible assets. That's a good business. It's a fantastic business against the long-term bond, at 2%. If you have a choice between a 2% instrument and a 12% instrument, which one's going to win over time? So if you ask me whether I think banks are going to go down where they only earn 3 or 4% on tangible assets, I don't think that'll happen. The question is really whether they do something massively dumb. I mean, which periodically a number of banks have done. And I feel very good about the banks we own. They're very attractive compared to most other securities I see.
Banks, for example, gain from increased interest rates because their profit margins expand when rates rise. Bank of America appears like a wonderful investment to have in your portfolio for 2022, especially with the speculation of Powell possibly rising the rate 4 times this year. However, keep in mind that this is not financial advice. Then there's American Express. This company accounts for about 7% of the total portfolio. Buffett bought his first stock in a credit card firm in 1963 when it desperately needed money to expand its operations. He saved the corporation numerous occasions, including during the 2008 financial crisis. Many believe that American Express is a poor investment given the large amount of competition in this sector, including Apple's recent launch of a card in partnership with Goldman Sachs. But Warren maintains that the credit card space, like the car space, will always have competition. Even in the face of fierce competition, he feels American Express has a place to prosper. Amex renewal and use rates are the envy of the industry. It is a high-end card with a reputable name that's just going to become better, as evidenced by this graph. Furthermore, another company in the sector stands to benefit if the Fed raises interest rates. We finally made the switch to Coca-Cola. The renowned soft drink accounts for around 7% of the company's total portfolio. Warren's favorite investment is this one. He bought the first stock in 1988, soon after the stock market crashed. And it is no secret that he loves the soft drink so much that he consumes 5 cans per day.
I drink probably 5 12-ounce Cokes a day, and that's about 700 calories. And I've been doing it more or less all my life.
But aside from his fondness for sweet beverages, he also appreciates the fundamentals. He has been cited as claiming he will never sell a share of the company, despite the fact that its stock price has soared in recent years. Coca-Cola has now a price-to-earnings ratio of $27. Quite pricey when compared to the levels Warren purchased in the late 1980s. Regardless, the corporation has been operating for a long time, and the legendary brand may be the most powerful in the world. This is certainly one of the safest investments ever, with products in over 200 countries. And the remainder of the portfolio is made up of dozens of companies with insignificant weightings. The 4 stocks we just looked at account for over 75% of Buffett's total portfolio. But if you want to see the rest of the model positions, CNBC has a wonderful table that they update quarterly which shows the whole Buffett portfolio. Keep in mind that Berkshire Hathaway has over $200 billion in cash on the sidelines, waiting for a good time to buy. Buffett didn't take the March 2020 downturn to put his money to work in a large way, indicating that he is likely waiting for a bigger drop before jumping in and buying. In any case, as much as we'd want to think this is a well-diversified portfolio, the Buffett portfolio is significantly reliant on the performance of a single company, Apple, which accounts for nearly half of the portfolio, with 3 other businesses accounting for the remaining 25%. And with that, today's video comes to an end. If you haven't already, hit the like button below to show your love and support for this video. Also, don't forget to subscribe to the channel by clicking the subscribe button and turning on the notification bell next to it to be the first to know when a new video is posted. Thank you for stopping by to watch. We hope you had a great time, and we hope to see you again soon.